Welcome traders, my name is Adam Harris, Chief Market Analyst. I'm actually recording this again from scratch because I wasn't happy with the audio from the first one. It didn't sound that professional, so I'm redoing this. So again, welcome to this week's weekly analysis video brought to you by myself and SabioTrade. All right, please don't forget that you can access a discounted prop account membership using this affiliate link here on the bottom right hand side and also in the video's description. And obviously just remember, SabioTrade are very keen on supporting traders with talent and providing them with scalable capital. That's a big thing. Take advantage of it. All right, so let's have a look. Let's kick off with the markets. First thing we need to know is that we are predominantly in a range with the dollar. All right, and until we get out of that range, it's been weeks. It's in fact goes back to June and July. It goes back to sort of June, July. It's been going on for ages. And so until we get out of that, it's tied to the tariffs. So until and on top of the tariff uncertainty, there's now the US government has shut down, which also means that last week's NFP jobs data has been postponed to this week. Between you and me, I'm of the opinion that the Republicans really don't have any intention of governing at all if they can. So I think that they will probably extend, I could be wrong, but I think they will extend the shutdown as long as they can. And if that's 3 months, it'll be 3 months. Also, it allows them to, if the data isn't looking good, it allows them to not have to release that data. So I mean, that's a bit ridiculous. 3 months is a bit ridiculous, but certainly for this coming week, NFP data from last week Friday is now being moved to this coming Friday. But I think that shutdown is going to continue through. They really aren't interested in coming back. They don't really want to govern. And if there's no real reason for them to absolutely have to, I don't think that they will. So I'll be surprised if they come back before then, but let's just see how it plays out. Let's see how it plays out. So first thing is, there's no clear trend. This is range bound, and it's actually the same. When you look at GBP USD, although it dipped below here and dipped up here, it's still stuck in the same price range going all the way back here to May even. There's a couple that deviate from this. So Aussie dollar has actually started to slide to the upside. If you look at it over the same period of time, it's been almost accidentally strengthening, and it's pulled back. It's produced a nice bullish candle here. And I think that if it breaks the high of last week, we could see this continue to go higher. So Aussie dollar, US dollar, and Aussie dollar on its own is on my watch list because it is showing some independent strengthening. Kiwi, on the other hand, is going the other way. It appears to potentially be weakening. It's coming into a level of resistance, and we're going to see if it finds some support, but it could very well continue to head lower. That is a very real possibility. Moving on, dollar CAD as well. Also, one of the three. It's literally just these three here that are deviating. They're starting to show some independent behavior. The Canadian dollar is weakening quite a bit. It's also trending higher, and so it's very possible that we could continue to see, if not dollar CAD itself, but CAD crosses such as, ta-da, EuroCAD, continue. And they're actually trending very well. So for now, the spikiness, you'll see a lot of this in the charts now. We used to get sort of full-bodied candles. Now we get a lot of these sort of indecision, wicks top and bottom kind of candles here. That's tied to the general indecision in the markets. But this is trending high, and therefore any pullbacks could represent buying opportunities. Aussie CAD, very, very nice. It's broken through a major resistance level, so I want to draw that in so that we can see that. We've broken through some key levels here. I've tested that for support as well, and it has some upside potential. So again, quite liking the look of this. Okay, it's got some upside potential. This is Aussie CAD. I quite like the look of it. It's one of the few currency charts that is actually starting to move. So if you aren't finding a lot of trading opportunities in the currency pairs, you're not imagining it. This is why it helps to have a look at the weekly chart, because the weekly chart gives us some perspective that we don't necessarily see on the daily or below. And it has a big implication for day traders as well. Let's move on. Let's have a look at some of the best stuff in the markets right now. Gold. So with all the uncertainty going on in the world, which looks like, if anything, it's going to get worse, not better, it makes sense that gold and silver are climbing. And so they stay on my list. 4 hour and daily, any kind of pullbacks for me would be buying opportunities. Yes, silver's coming up to $50, which is its historical high, and it might encounter a sell-off. So I'm expecting pullbacks at some point, but I remain bullish with this trend for now, at least for this coming week. Excuse me. So gold as well, continuing to head up towards 4,000. We'll see how it reacts at $4,000 an ounce. Again, I think these trends are likely to stay intact as long as the uncertainty remains. And if anything, I don't think that's going away. So I think these trends will stay intact. The 4 hour and the daily will be the timeframes to watch. There can be a bit of noise on the lower timeframes or consolidation, but the higher timeframes, the trends seem to be staying intact. Let's have a look at some of the other commodities. Let's have a look at crude oil. So what's interesting so far is that it's broken through a clear level of support and could very well be testing that for resistance. on the whole, the longer term trend is to the downside. It just doesn't have any good quality trends, but the momentum is more bearish than bullish, and it could provide a bearish rejection candle here and a nice signal to continue the move to the downside. Let's move on to the digital commodities. All right, so Bitcoin breaking up, looking very nice, broken up to this consolidation. Overall trend still intact, looks very good. Series of just nice higher highs as we go. I beg your pardon, higher lows. And it's testing this kind of upper level now, 125,000, but upside potential, again, making sense. It's also being driven a bit by uncertainty. Ethereum, beautiful breakthrough, pullback, nice bullish candle, taken off, breaking the high here. This is a bull flag, it's broken through that. So again, this is hinting at the potential for a move up to possibly 5,500, looking nice and bullish. Let's just see what we've got on that. Yeah, I think we're looking pretty good. For now, let's go and see how we react with this level of resistance there. Let's put in that level and just mark it so that it has been marked. We'll just do that. And so now we know, okay, where it's probably going to bump its head up against that. But overall, this trend looks good. I think it's likely to continue upwards. Let's move on to the US indices. So guys, very nice and bullish. Bit of a correction happening today. So I recorded this morning and I'm re-recording it now during the day. It's come back to test this level of resistance. Could very well find support here. It's looking pretty good. Actually, look, the day is still young, but on the 8-hour, for example, it is producing a really nice pullback into the moving averages and a nice bullish candle here. Let's have a look at it on the 4-hour. So far, just showing signs of that. So we'll have to see how it is. How it closes is important. If I go back to the daily here, yes, if we find it's closing back down below this level, we could very well see our way into a bit of a consolidation this week. It would kind of make sense. The market's a little bit top heavy. We've got a little bit of bearish divergence. Overall, the market is bullish. But with the government shutdown, it could be an excuse for the markets to take a bit of a breather. Again, I don't think the correction would necessarily be very big. If anything, I think it would just pull back, consolidate, and then carry on when the markets reopen. Having said that, the markets are so incredibly bullish right now, and they may not care. They may not care about the government being shut down. Therefore, they may not even be threatened by it. We are in a bit of a bubble. The markets could continue. So one of the things I'm looking for in this area, certainly tomorrow, that'll be Tuesday, is looking for a bullish candle. That'll be a sign the buyers are coming back in. If it closes and stays above this level, it should produce a continuation to the upside. Same thing again here, you're looking at the S&P. Even today as we speak, it's still trying to push higher. If I move across and have a look at NASDAQ, pull back, beautiful, testing the highs, bullish candle, breaking the high, continuing to the upside. So far, all of these are looking bullish. The FTSE itself, having a bit of a red day today, but this overall trend still looking good. And again, any kind of a pullback into this level, I would see as a buying opportunity here this week would be amazing. So we'd like to see that happen. Again, the day's not over. We might see that this ultimately closes a little bit higher. We'll see, but the trend still looking particularly bullish. So incredible to see how bullish some of these markets are. I might actually go through and show you some of the non-US indices that look incredible. Here we've got Tesla, nice little consolidation high-low. Looks like it's going to keep heading up until it hits that 500 mark, looking particularly good. NVIDIA, nice pullback, nice reaction here. Yes, I think there's a little bit of resistance where we are, but the overall trend looking particularly decent. And it's a very nice level of resistance. It should find some support and continue up. We then have Apple. Again, more of a consolidation, but still looking really good at this time. I'd love to see a correction and then a takeoff, but so far still sliding to the upside. Amazon, interesting here. Doesn't look as good when you switch it up. Let's go and have a look at it from a weekly perspective, get a bigger picture there. This now seems a little bit more of a consolidation. It's more range bound. All right, so the higher time frame, they're giving us a little bit of clarity. Let me just draw in the top and bottom here. So here we've got the support, top and bottom. We're still range bound. So we could very well see a move back up to the top of the range there. Microsoft, again, just bumper at the moment, continuing to look very nice and bullish. Again, I think any pullbacks are potential buying opportunities, looking particularly good. Now, again, Meta, same thing here, possible level, strong level of resistance, but get the bigger picture perspective. Let's have a look at it from a weekly, see what it looks like there. Okay, so we've got a nice level of resistance and a bit of a downtrend. Let me just mark that. Oopsie, that was not at all what I was going for. I twitched at the very last second, and again, just double this up. So we've hit some proper resistance. We've broken this uptrend. We've broken the low there. We've got a low, high, low, low in a downtrend. So what does that mean? It means it's a monthly correction. It also means this trend is done. So let's get a sense of that. Let's have a look on the monthly. doesn't look so bad. Excuse me. On the monthly, it looks very much as though we're just getting some rejections here. We're pulling back into the moving averages. So for now, my expectation is that this will correct towards about that 650, 660 mark. And there's a very real possibility there could be a nice bullish reaction that we get here. It is starting to get a bit top heavy. You can start to see a little bit of the MACD starting to flatten, which implies that over the coming year, it might consolidate a little bit. But for now, I just see this as a normal pullback and expect it to potentially resume that uptrend, possibly even before Christmas. Let's see how that plays out. Finally, let's have a look at Alibaba, just on fire, looking absolutely beautiful. I love this because also we want to be looking away from US stuff at the moment. So looking at non-US stuff, non-US companies, there are some really good opportunities there. So this trend, very nice and intact. Any pullbacks into the moving averages, these are 50, 20, and 10, represent potential buying opportunities. Definitely worth a while, excuse me, definitely worth a while to have a look at non-US indices. FTSE is just having its best run in decades. I got to tell you, when you look at the higher time frame for this, it's spent 30 years stuck below 7,700, and now it's just climbing to the upside. Looks incredibly good. Again, buying opportunities are amazing here. It's another sign of this, whether we're in a bubble or not, it's a sign of this bullish intent. The DAX consolidating here and actually looking very good to break higher. This is a monthly time frame, I think. So what we're seeing here at this key level is the possibility that the DAX is close to breaking out and doing another run up. If we have a look at the Euro stocks, EU stocks, you can see breaking through past previous highs, looking nice and bullish here. Go to Spain, look at the IBEX. Okay, a little bit overextended if anything else, but just trending incredibly well. Let's have a look at that weekly chart. Just amazing. Nice pullback continuing to the upside here. So again, very bullish, ladies and gentlemen. All right, this is not, remember, this is not representative of the economy. This is representative of spare cash. So if you're an investor, you put money into the markets because you don't need that money. It's not your paycheck, it's not paying your bills, it's spare cash. You can afford to live without it for a long period of time. So the markets are made up of pension funds and mutual funds and retirement funds and money that most people don't need. And obviously, as you know, we live in a world today where a lot of wealthy people get great tax breaks. Corporations are paying very few, if any, taxes. So a lot of that money is essentially what is making up the predominant ingredients or the inflow, capital inflow here. Okay, so if you're wondering if it seems like the economies aren't doing well, but the markets are, that's why. It's not very complicated when you look at it from that perspective. Markets looking nice and bullish. Nikkei, which has had a traditionally or a historically rough run of it, breaking up, going to all-time highs. So again, any pullbacks for me are buying opportunities. And the Hang Seng, which I love, the reason I love it is because historically it has been the worst performer. It double bottomed in 2023, 24. It has just started its uptrend. It's only now just really joined the rest of the party. And so if the weakest index is now fully bullish, right, that usually means that we're at the beginning of a bit of a bull run. It's a bit crazy, but there it is. So it's got some upside potential. My point here is just to draw your attention to the fact that all the indices around the world, even the weakest ones, are all now on the same page. They're all bullish. Okay, here's the ASX also pushing high. So again, any pullbacks on the daily on the higher time frame for swing traders, those for me represent buying opportunities, and definitely not just the US indices. I used to just look at those. Now there are so many other indices that are trending beautifully and smoothly and actually make a lot of sense. Cryptos as well, gold, commodities are having a heyday. So there are some really good money-making opportunities, ladies and gents. But as usual, we manage our risk appropriately, keep it small, focus on the strong trends, and manage our risk appropriately, as I said. Excuse me, I'll leave you with that and have a great week. Thank you.